Hello, welcome to the European Open briefing for Thursday, November the 17th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So we're seeing a bit of an easing in the dollar rally this morning. The dollar touched a 13.5-year high yesterday. It's currently operating slightly below yesterday's levels, and this is mainly as a result of US Treasury yields falling back slightly after the sharp rally of recent days. We do have Fed Chair Janet Yellen appearing in Congress later today. She will make her testimony and she'll speak about the economy. So she would most likely make some comments on a possible rate hike in December. We did have some news about the Bank of Japan this morning. The Bank of Japan conducted its first bond buying operation to control the yield on long-term Japanese government bond yields, and that had a downward effect on the yen. The Aussie still remains under pressure. We had some slightly weaker than expected jobs data out of Australia today. And the crude oil, another mover, yesterday it actually rose after much bigger than expected increase in US crude stocks. It's since eased back a little bit, but we're seeing market attention being mainly on the upcoming OPEC meeting, where some kind of a deal is expected. So crude stock changes didn't have too much of an impact on crude oil prices. So let's start with the dollar. Here we can see in the chart the dollar index. It did touch 13.5-year high of 100.57 yesterday. It's currently trading around 100.27. We are seeing some signs that the dollar rally may be easing. We could see some consolidation because based on what the markets know already on what Trump is likely to do, I think the dollar rally has probably gone as far as it can until more information is known as to what policies Trump will in fact implement. The main focus so now moves on to Fed Chair Janet Yellen, where she will likely signal a December rate hike. She's going to testify before the Joint Economic Committee in Congress at 15 hours GMT. And yesterday we had another Fed speaker, Philadelphia Fed President Patrick Harker, who isn't currently a voting member. He will become a voting member in the Fed next year, but he did voice his support that rates should go up by 25 basis points. If we look at now at the dollar yen, yesterday the dollar touched 5.5 months high, 109.75. It's currently trading just above 109 level. It did slip back early in Asian trading to 108.55. This was mainly due to profit selling from yesterday's sharp gains, but then it reversed higher again, and this was after reports that the Bank of Japan conducted its first bond buying operation since its announcement in September that it's going to start targeting the yield curve instead of having a fixed monetary base to target. So the Bank of Japan bought long-term government bonds, in specifically 10-year government bonds. It's trying to keep the yield on 10-year JGBs at 0%, and we saw the yields falling from 0.03% to 0.005, around about there. And Crude did speak as well. He said that the Bank of Japan does not have to accept higher yields just because of the current moves we're seeing in US Treasury yields. So this could potentially be a sign that the Bank of Japan will be active in the coming months to keep the yields on JGBs at near 0%. Let's move on to the Australian dollar now. We can see that it fell slightly yesterday, and it's remained around about those 2 months lows since then. It came under further pressure this morning from disappointing jobs data that showed that employment in Australia rose by just 9.8 thousand in October versus expectations of 20,000. We also had a sharp downward revision to the September figure. The unemployment rate was steady at 5.6%. Although the recent employment data, including the wage growth data we had early in this week, do suggest that the door to rate cut by another rate cut by the RBA is still open, even though the RBA has recently adopted a more neutral bias. And just to repeat again that even though we've had a bit of a rally in base metal prices, which Australia exports a lot of, we are seeing the Aussie not doing too well, given that the US is so strong at the moment. So those positive factors haven't really affected the Aussie in too much of a positive way, and the negative jobs data has added instead further downside pressure. Let's move on to crude oil prices now. We can see that rally from 2 days ago on renewed expectations that OPEC, we're seeing evidence that OPEC is making a hard push now to reach some kind of a consensus among all OPEC members to decide how the cuts will be distributed among different countries. The meeting of OPEC is due to take place on November 30, so it's not long to go now, so we're seeing a lot of activity by OPEC officials to reach a deal, and that's helping crude oil prices, even though we saw a bigger than expected jump in US crude inventories yesterday from the US Energy Department data. For the week ending November 11th, US crude stocks rose by 5.3 million instead of 1.5 million as expected, and that helped. Is kind of having some kind of downward effect with that, because yesterday crude oil did briefly jump above $46 a barrel, but that bigger than expected increase in crude oil inventories is somewhat weighing a little bit. The prices are currently around $45.50 a barrel, but overall the main focus now is what will happen with the OPEC agreement. Let's have a look at today's calendar. We can see there the Australian data out already. Coming up shortly, we do have UK retail sales, where UK retail sales are expected to grow by 0.4% month on month in October. We're going to have the final inflation reading for Eurozone for October. That's expected to come in at 0.5% year on year. And then later we're going to have US inflation. That of course is important given that the Fed meeting is only weeks away, this December FOMC meeting. US inflation is expected to edge up slightly from 1.5% to 1.6%. Core inflation though seen as holding steady around 2.2%. We're going to have some housing data later in the day, and also we're going to have the Philadelphia manufacturing index for November. That's it from me. Thank you very much for watching, and have a great day.